Wednesday, June 24th, 2020, Maneco 64, home of alternative economics and contrarian views. Today I want to talk about why gold is a revealer of falsely stated wealth and what that means, of course. And before I start today, I wanted to say for all my new viewers who are interested in precious metals, especially those viewers in the UK or else also in Europe, I have a promo code for gold investments. They're arguably one of the oldest family-run bullion dealers in the city of London. I've got all the details below in the description if you're interested in getting started in precious metals. If you use my promo code maneco64, you get a slight discount on the offer price. And I also have a referral code for Glint. Glint is a little different. They're not a bullion dealer, but they store your gold in Switzerland and they allow you to store that gold and also spend it through a MasterCard. My referral there is Mario Glint 79. So before I go into the subject of this video, let's quickly look at where the markets are this morning in London. It's just gone past 8 a.m. and we've got spot gold at 1770. The high overnight has been 1774. So we are breaking out, not aggressively. Usually when markets break out, there's more momentum, but I think it's because this is a quiet time of the day, a quiet time for the markets. We'll have to wait and see. 1765 was a very key resistance. So we are in uncharted territories for this year, of course. There isn't much resistance really up until around 1800 now. And after that, gold could really start flying upwards. We could see a lot of fireworks, especially against the dollar. Because if you look at the other currencies, a lot of them have come off the highs of the year. And as I've said before, all these currencies take turn against gold. And I think now is the turn of the dollar to sink versus gold, or for gold to go up. So yeah, we're at 1770, up about $2. The low has been 1765. That level now is going to act as a short-term support. Of course, we could break through that level in the short term. Would it mean this is a false breakout? I don't think so. I think the fundamentals and everything else points to higher precious metals prices. We've got silver is having a tough time getting through that 18 barrier. Right now we're at 1794, up about 3 cents. We've been up to 1810 earlier overnight. The low has been 1782. The Dow future right now is up 4 points. So very quiet here, the stock market. By the time I edit this video and publish it, we could be down 200 or up 200. Who knows? The S&P is at 3130, unchanged. And the NASDAQ 100 future is up 22 points, or 0.2%. Currencies are fairly quiet as well. We've got sterling or cable at 125.22. That's unchanged. The euro is continuing to move higher. We're at 113.22 now, up 0.13%. And the dollar is up slightly versus the yen at 106.66. Crude oil, WTI, is at $40.38. So that's down a little bit from yesterday when I made my video. To finish off with the markets, the 10-year yield is at 0.72, so it's up slightly, 1 basis point. Bond market still very calm for now, but we need to keep an eye on it. Bond market is very important. It's what determines the risk-free rate of return for all other investments. So we need to keep an eye on that. So let's look at why gold is a revealer of falsely stated wealth. And the reason I'm talking about this today is because we're starting to see even the mainstream press question the policy of the central bankers, especially here in the UK. We've seen the governor of the Bank of England in the last few days He's written an article for Bloomberg. He's been on Sky News trying to warn people not to expect the massive creation of credit that the Bank of England has done to basically bail out the government. They've injected 300 billion pounds out of thin air into the system, and they've come out, or Andrew Bailey's come out, and he's trying to calm people down or downplay the fact that the Bank of England is not going to keep doing this. I think people are concerned, especially at the Bank of England, about confidence in British assets, well, denominated in the Bank of England note. And even the Telegraph, you can see here from this article, they're even questioning the Bank of England. They're even talking about Weimar hyperinflation. They're talking about Zimbabwe. And they're warning the Bank of England that this is a dangerous game. So this is why I wanted to touch upon this gold is a revealer of falsely stated wealth. And that's one of the reasons why as well bankers, central bankers, bullion bankers, they're all in this together. They try to push, of course, their fiat currency system. They don't like gold. That's why they try to control the gold price. They don't want the public to see gold as an alternative. They will make it volatile as well to put people off. But in the long term, as I've told you, gold has only one way to go, or the fiat currencies have only one way to go, and that's down versus gold. That's because the central bankers, the politicians, they have no discipline. And this is what I want to talk about today. And the term gold is a revealer of falsely stated wealth. That's from this book here, A Pocketbook of Gold, a survival manual for monetary mayhem by James Sinclair and Peter Carlin. Highly recommend this. You might find it on jsmindset.com, Jim Sinclair's website, or elsewhere. Probably not very easy to find, but I highly recommend this. Some of my viewers want to know what are my favorite books about economics and money. Well, this is one of them. So let's go through the section where James Sinclair and Peter Carlin talk about this. So I quote, "When wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate." This is what we've been having since the beginning of this century, since 2001. The depreciation is borne by the citizenry, who are forced to lower their living standards to compensate for both personal economic management as well as the mismanagement of the affairs of state. Well, that sounds very familiar to what's been happening in the UK, in the major European countries, in the US, all throughout the Western world. Yeah, the 1% and the people near the 1% have done very well from this inflationary tsunami, really, we've had in the last 20 years. And it might sound funny for me to say inflationary tsunami, but all the massive creation of credit and fiat currency entries we've had in the last, well, especially 12, 13 years, that's inflation. Yes, it hasn't gone as badly into consumer prices as they used to in the 70s and 80s, but I would argue it actually has. The general public feels it. The standard of living has gone down. All the basic necessities of life, they've all become more expensive versus our national fiat currencies. So let's continue. Financial and military overextension has a social corollary in overpromised Social Security, Medicare, overstated real estate, equities, affluence. As expense runs out of control, guarantees to the citizenry also explode as politicians seek to retain the privilege of office. And this is going up massively now, all these promises, especially with the crisis, this engineered crisis we've had this year. This book was written in 2010, by the way. But the promises of wealth are false. Yeah, and that's what gold does. The gold price is a barometer of that. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. Yeah, I still see a lot of people out there on the internet or on YouTube, even very young people pushing this real estate mania, telling people they can become wealthy through borrowing and buying real estate and flipping it. They're still doing it. It looks like that bubble burst, but the governments and the central bankers want to keep people playing along in that bubble. I'm not arguing that there are some people who've succeeded from doing it, but it's a very dangerous game. Wealth that was taken for granted suddenly appears ephemeral. The amount of currency which once bought certain things no longer does, but wages have not risen along with prices. Instead of wealth, citizens get saddled with a big chunk of government debt, i.e., debt created by mismanagement. And we're getting that in spades right now. National debt in the US has gone over 26 trillion. I think it was around 20 trillion just a couple of years ago. Same thing here in the UK. We're going to have a 300 billion pound budget deficit. That's going to be added on to the national debt. It might not sound a lot, 300 billion pounds, but for a small economy relative to the US like the UK, that is a lot. The result is everyone pays more for food, fuel, and other necessities. Yeah, it's usually the necessities. It's not the laptops or the iPads, as I think it was one of the New York Fed presidents comment when they asked him about inflation, and he said, "Oh, iPad prices are going down." Someone even made a comment at the time referring to Marie Antoinette, and they said, let them eat iPads, right? Or let them have iPads. Government passes on the mismanagement of economic affairs to its citizens by devaluation. And devaluation can only happen really versus precious metals, versus gold especially. And why is that? Well, because gold is the ultimate store of value and the most stable store of value, and has been for thousands of years. Yes, in the beginning, a lot of the peripheral currencies will devalue against the dollar, but eventually, the dollar included, they all devalue against gold. As the imprisoned money manager Martin Armstrong has artfully stated, and here they quote Martin Armstrong, the decline in the value of a currency is in reality a free market tax taking away wealth that is overstated. So currency can also be an indirect tax to compensate for the poor management of the state. So that's what Martin Armstrong said. The corresponding rise in gold, especially when it is a global phenomenon, and we've had that. We're having that. It's only the dollar that has not caught up to the other fiat currencies, or caught on the downside. It's still below its all-time low versus gold, or gold is still below its all-time high, but I think we're getting there slowly but surely. As it is now, in effect, a devaluation of all the world's currencies and a restatement of wealth on a global scale. As is both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right, as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. Falsely stated and assumed wealth, largely created out of the assumption of debts that can not be born must eventually reset at a lower level. Populations bear that restatement of wealth through the expansion of monetary aggregates, causing a devaluing of the national currency that denominates their wealth. This happens to all currency holders, regardless if they personally assumed any debt. Gold rises because gold is a monetary proxy, inversely related to a nation's currency. The burden of indebtedness is reduced along with the standard of living. So yeah, they can write off the debt by inflating the system, but the consequence of that is a lower standard of living. Have you ever wondered why countries like Brazil or other third world countries, why there's so much poverty? Well, because they've been doing this for over a century. They've never really had sound money. And that's why they've always had inflation and hyperinflations. In the West, we've had more discipline, but I think that's going down the drain right now. Commodity prices increase. Debt deflation has become currency inflation. They are one. So the commodity prices, they're still, generally speaking, relatively low. The other commodities outside the monetary commodities, but I think they're going to catch up very soon. And that's why I keep telling my viewers, and I've been telling them since I started this channel back in late 2015, that it would be wise to protect your fiat currency savings by getting out of it and exchanging it for precious metals. I'm not advising people. This is what I've been doing since 2002, and it has protected some of my savings quite well. It's up to the individual to decide how much they want to save in precious metals or real money, really, because that's what's real money. Yes, gold and silver don't pay an interest unless you lend it. And there are very wealthy people who lend their gold. It's called gold leasing. And they do get a small amount of interest. But then again, we're getting very little return on fixed income right now. On the safe government bonds, I would say the real rates are actually negative if you account for the real increase in the cost of living. So there you go. Gold is a revealer of falsely stated wealth. And hopefully you can understand a little better why the mainstream media, the bankers, the politicians never really mention gold. And they always denigrate those like me and probably you, hopefully, that know the truth about gold and why it's sound money and protects people's wealth. They don't want you to protect yourself. They're not looking after your best interest. That's all I can say. So if you enjoyed this video, please hit the like button, share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, Parlay, and all these other platforms below here. I wish you all a great day. Take care. Bye.